Hey everyone, how's it going? This is Richard, and I thought I'd make a quick video here about how to scan and screen for relative strength intraday. And relative strength, if you're not familiar with what the concept is basically outperformance versus the rest of the market, the rest of the stocks in the stock market. So why is this important, first of all? Well, first of all, we want to be noting these type of stocks that are outperforming the market because they're likely to be our leaders once the overall market resumes the uptrend, or if it has a bad day, follows through the next day to the upside. So we always want to be keeping track and making RS lists because that keeps us in tune with the market, in tune with what's working at the moment, and that allows us to outperform when the overall market is strong and trending above the moving averages. So first of all, relative strength is most obvious when the indexes are pulling back, experiencing correction, and that's when the stocks that are being accumulated, supported by institutions, become most clear because, simply put, they outperform the indexes on a relative basis during these periods, during these pullbacks, corrections, all of that. But it can be as simple as looking on the stress days where the indexes are down, gapping down, experience a lot of weakness. Look for what's outperforming on those days because those are the ones that are being supported on that day by the institutions, the big money, the smart money. And that's kind of why we like to say that leaders are most obvious on pullbacks, on intraday corrections, all of that, because when the indexes are just trending for 7-8 days, it's very unclear what stocks are kind of outperforming in that moment. So that's what this video is all about, relative strength and screening for that on an intraday basis. So overall, I like to do this in a few different ways, and that's kind of where my columns come into play over here. And I've got a bunch of different ones here, but we're going to start over on the right-hand side and talk about closing ranges. So a closing range, if you're not familiar with what it is already, it's basically where the stock closed within the range from its high to low. So here on the Qs yesterday, we had a closing range of about 25% because this close right here is about 25% from the low within the range from the high to low. So that's what a closing range is. And a simple method to find outperformance is on a day like this where the Qs closed at 25%. You can actually see it right here. That was the daily closing range on this day, the 15th. So remember that number, 25%. So if you go over to a list of stocks, you can see that if we sort by that in TC2000, you've got a whole bunch of stocks closing with 90% closing ranges on this day. And if you go through these charts, you can see very strong closes right near the highs. And simply put, they're outperforming the Qs on this day. So if on a day, the closing range of a particular stock is better than the Qs, that's pretty much the definition of outperformance on that day. And another quick way to do it is if we sort by the percent change, a lot of these were actually green on the day. You can see there's a bunch of red as well, but the stocks that were green, that's really what we want to focus on a day when the Qs are down 0.5%, 1%, 2%, because these are green for a reason. They're being supported on that particular day. We've got GAT over here doing really well, SI as well, 10 up 6.35% when the indexes are down 0.5%. That's significant, and you always want to be keeping track of that when you are trading and watching action intraday. Now, another way, of course, to do it is to sort by price new highs and relative strength new highs. These stocks on a price and relative strength basis are making new highs on a day when the Qs, SPYs are experiencing some weakness. So these are experiencing relative strength at the moment as well. You can see QFIN, a great trend here above all the key moving averages. So once again, there's so many different ways to do it, but you just want to be looking for those characteristics, that outperformance versus the index over the course of a month, week, or as little as a day period. So one different way that you can visualize this, and I think this is really cool, in TC2000, you can make a kind of comparison chart intraday, and let me go to a 5-minute chart. So this is QFIN yesterday when the SPY sold off and closed pretty poorly. So this isn't the best example, but overall you can see that it pretty much follows the rest of the market as most stocks do. But you can see that it actually holds up a little bit better. It closes right near its open. So it's definitely showing a little bit of relative strength here. If you go to TEN, you can see clear outperformance here, trending above the 21 EMA when the SPY is pulling back, chopping, really wide and loose here, and this is just nice and tight outperformance, steady, really throughout the day. And even the relative strength line intraday, this is the price of the stock divided by the price of the SPY, and this is increasing over the course of the day. So simply put, there is outperformance here, and this you can see this over and over again. CCRN, great trend intraday above that 21 EMA. AGTI, not so much, but still outperforming, closing above its open. So there's so many different ways, once again, to do this, and I think this is just a really cool visualization intraday of stocks that are outperforming. And on a breakout, you just want to see the stock trending, pulling back, trending, and outperforming over the course of the day with ideally volume coming in. And the last way that I really like to screen for relative strength intraday is these two columns right here, percentage from the open and percentage from the low. And I find that these are most helpful when we have a gap down open because they allow you to see what stock is recovering really quickly and hopefully doing an oops reversal and going positive red to green on the day. So if we sort by this, you can see that TEN had a really nice move from its open. This wasn't a gap down open, but this is kind of similar. CCRN, let's say we had a gap down on the Qs, the SPYs, down 0.3%. This had a gap down and then immediately moved up from its open, showing a lot of relative strength, showing a bid early on in the session. So that's what you want to be looking for using these columns. Sort this intraday at 9:35 a.m. Eastern Time, and you'll see that these stocks that have risen quickly from the open, those are outperforming early on especially. And percentage from the low is also very helpful in this situation. The stocks that form really long tails here are showing a bid. So PLBY, even though it was down yesterday, finished well off the lows. So it is within the context of a short-term downtrend, but it is showing some support here. And obviously you have to take volume into context. And you're not seeing much volume here. But say you had a lot of volume, a nice reversal off the lows, that's showing a bid in that stock, and that's showing supportive action. GME as well, a little upside reversal bar here, not on too much volume. CCRN, nice move from the lows. TN as well. So overall, there's so many different ways to do this. Closing ranges, percentage from the open, percentage from the low, looking at a chart intraday, scanning for price new highs, relative strength new highs. And you really just kind of want to build up evidence that a stock, obviously if it's setting up right, could be a potential leader in the near future. So I hope you guys enjoyed this video. If you did, go ahead and leave a like down below and subscribe if you're new to the channel. And let me know down below in the comments if you have any questions about my process, methods, TC2000, really anything. And with that said, thanks for watching, and I'll see you guys in future videos. Thanks.